Hello, everyone, and a very warm welcome to this major markets update for Friday, June the 14th, 2024. On Wednesday, we showed you that we were dealing with extended waves, which are longer than expected. It is not unexpected in the sense that we do know they can happen. We just don't know if they're going to happen. And in this case, we are dealing with them. So what we're now doing is simply tracking these extended waves. And so far we have zero indication that they have completed. If anything, most likely only a smaller third wave is about to complete. We could already be in a smaller fourth wave and then still another fifth wave, which would then complete potentially only a third wave, another fourth wave, another fifth wave. Okay. So we have zero indication of the top is in place. I'll show you some stuff where there are early warning signs from a bigger picture. But for now, still expect higher prices even after a pullback. So let's go to the charts and simply do it in alphabetical order, starting with the Dow Jones. And then we'll do the NASDAQ 100. Then we'll do the semiconductors, the SP 500, and the IWM. So this is the Dow Jones, wave count 1, haven't changed it a bit, that we have completed the ABC for this B/2 and are on our way lower. I could even make this still A, this still B, and then wave C. So we could also see something like this, that we have simply completed this here, and we're going to see a more protracted wave. Okay, so this is still very possible as well. This is the problem we get with these sideways consolidative weak price action. We must note, though, that Dow Jones is below its 20-day moving average. It is below its 50-day moving average, and in its Ichimoku cloud, it's still above its 200-day moving average, but that's about it. So it is a reasonably weak-looking chart. Okay, so please keep that in mind. And due to the price action we've had here since late May, there's no real clear trend. We had an all-time high here earlier in May, which was very close to what March. And as you can see, the Dow Jones hasn't really done much since February, right? So the Dow Jones is not in as great a shape as the other indexes. But that doesn't mean we cannot make any soup out of this. So this is then, of course, the potential for a more protracted B/2. The other one is the 1-2 setup, but I won't go there until we pretty much break above 39,750. This is pretty much where I think we should draw the line. So I'm going to put that one there. If we get above that one, I think it'd be quite likely we see the 3, 4, and 5 to new all-time highs. Why is that? Because that's the 76.4% retrace of this decline here. Again, this decline counts as 5 waves. So this could be an A/1, and now a B/2, which can be very protracted, very long, but it just will not go above 40,000. Stall ideally under 39,750. Okay, so the other one is, of course, the 1-2 setup, required the breakout, and then we could have already topped here for this B/2. From a timing perspective, it matches. This decline was 1, 2, 3, 4, 5, 6, 7, 8 days, and the rally since then was 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's okay, but timing is not everything in the sense that the B2 can be more protracted. If we look at seasonality, over the last 127 years, the Dow Jones normally tops out somewhere June 8 till June 13. And that's kind of what we've seen here, right? Somewhere around there. And then starts to decline into late June. So that will give us another week or so of declines in the Dow Jones. Please do not match that with the other indexes, which of course are completely disconnected at this stage as they're making new all-time highs. So that would then look for another week and a half of decline. It doesn't have to be this way. This is always the last one I would look at for direction of the market. Sometimes it matches really nice, and then all of a sudden it gets completely disconnected. And then it connects again completely disconnected. And that is, in my humble opinion, not the best way. But we got to look at it. Got to give us some idea of what to expect. So this suggests weakness, which would match with a decline further in time. But we'll see. Price is the final arbiter. That's why we have these warning levels on the chart. So the warning level here, for example, for the bears is now pretty much the 50-day simple moving average at around 38,730. And then, of course, here 39,100. Then at 39,750. And the final is, of course, the previous all-time high. Right? If you go above these two, the third warning level is when the ship gets hit for the first time, right? The blue and the gray ones are warning levels, shots across the bow. If we get the shots across the bow, it really tells us that, okay, maybe we should change correction, right? Something like that. And if you get above the orange one, it's a hit, and one more shot and you're sink, right? If you would be shorting the market and go above here and not covering your shorts, yeah, right, you will get your face ripped off. That's why we do that, all right? Because this is where you're going to sink to the bottom. So we have these warning levels in place again as well for the bulls here. So as you can see, we are now below the first warning level, not yet below the second. We held the third, not yet below the fourth. So far, so good. NASDAQ 100. This is the hourly wave count. It's a bit based on Fibonacci of a bit. This is primarily based on Fibonacci extensions where we should have the ideal 3, 4, and 5 underway with an extended fifth. It's possible, but I don't really like it too much. So I think this is a more reliable wave count. That we're wrapping up this grade 3, we get a 4 and 5 based on how overbought the technical indicators are. It matches better with a third of a third wave. Okay, so then a deeper 4 and a deeper 5. So small 4, small 5, deeper 4, deeper 5 would be ideal. This is the weekly chart of the NASDAQ 100 with our original wave count. It's still okay. It matches. There's nothing wrong with it. We have a very extended wave 5. But if we would do just closing prices, then this was pretty much all of wave 1, wave 2, 3, 4, and 5. So as you can see, that matches a little bit better with what we see here on the daily chart. All right. It's a slightly different wave count, but it's fine. Then on this wave count, we had the 1 and the 2 here. Yeah, can do it. It's fine. But you can see here, this will target somewhere around 22,000, somewhere around there before this is all said and done. Don't be surprised if this is the case. The weekly chart is 100% bullish. We're above the 20-week, we're above the 50-week, above the 200-week, and they're rising and bullishly stacked, and above this rising solid Ichimoku clause. So we must remain bullish and must keep our bullish hat on. Look, we've raised on the daily chart the warning levels to yesterday's low and Wednesday's low. Okay, the first and the second warning level, respectively. The third warning level is now at around 18,900, somewhere around there. This wave 4 low. That was the previous fourth wave low. Okay, and then the final one is still here at around 18,400. Okay, we must remain bullish. It wouldn't surprise me if we get this, and not at all. Then this was a slight miscount, but it's still okay. Then we get a subdividing wave, green wave 5. And we simply have to move it a little bit higher. So nothing out of the ordinary. We remained bullish because we knew this green wave 5 was underway regardless. And using a slightly different, though objective, more correct approach, we could go all the way like this. Don't be surprised if this is the case. Okay? I see no reason to turn bearish whatsoever. This 1, 2, 3, 4, 5 in red on the weekly chart matches, of course, now the 3, 4, 5 on the daily chart as well. And this still has a hallmark of a classic third of a third wave extension. Wouldn't surprise me. So please bear in mind, there's nothing bearish about these charts at all. Look at the daily chart. You're above the 10, the 20, the 50, the 200 day. Everything is rising. Everything looks bullish. Yes, market tops always happen in the most bullish of circumstances, but we haven't even seen any negative divergence, right? As you look here in early 2024, how long it took for this negative divergence to finally matter. And we haven't even reached it. See this? All this, there, there, there. We don't have it. Doesn't mean it won't top, but signals are just not there yet from the daily chart. So that aligns better with this weekly chart. So I'll remain bullish until proven otherwise. Semiconductors as well, I remain bullish on this one until proven otherwise. I'm still missing, I would say, a larger fourth and fifth wave, but a smaller fourth and fifth wave. I think we're just wrapping up the smallest of smallest fifth wave of just a third wave, and then a 4 and a 5 yet to come. That's still what I'm expecting. I don't think we've topped out on this one. S&P 500 daily chart looks okay for this 4 and 5. This fourth wave doesn't have to go slow. We can also sideways consolidate for, I don't care, 2 weeks if it wants to. That's something else. But I don't think a top is in place. That is pretty much my primary expectation. Why? We haven't even broken, or in the case that we're looking here at the hourly chart, not even closed on an hourly basis below the first warning level, which is about 54.10. The bears haven't even been able to do that. They're really, really playing. Okay. Then we have, of course, not even gone below 53.80, and not even below 53.25-ish, and certainly not below 52.35. Okay. So no signs of the top whatsoever. We haven't broken on an hourly basis below the first warning level. Yes, there's negative divergences and all that good stuff from that perspective. But if anything, I think the next pullback will still be a decent viable pullback, because I still can see this as wrapping up the 3, the 4, and the 5, which once again matches, of course, 3, 4, 5, matches again 3, 4, 5. Okay, so wouldn't surprise me if that's the case. If we adjust, I've already done that for you. The warning levels, you can really see that it's pretty much here. This is, I would say, today's low and yesterday's low. It's about 5,400. We can raise then the second warning level at probably 53.70s, etc. Okay. So take-home messages: zero signs of a top being in place. Yeah, we're overbought. That's about it. Okay. Now, overbought doesn't mean we will instantly crash. Crashes happen from oversold, not from overbought. So I'm still fine with this wave count. I see no reason to change my tune. So what are some other people seeing? This is from Pretzel. This is posted today. Again, this is free of charge. You can add it to your own analysis. And he said, assuming no fifth wave extension, he said we could be close to completing the current fifth wave. Though the prior caveat in this previous update is that we could see one more 4 or 5 unwind, which is what we are suggesting as well. All right. So if great minds think alike, we're seeing kind of the same thing. This is also an interesting caveat because there's multiple possibilities in the pattern for the Dow Jones. And I just pointed them out. We actually have 3 different ones. And including a possibility of a larger correction for the Dow Jones is already underway, according to Pretzel. And then we should see a bounce for the wave 2/B, while the S&P rallies to modest new high wave 5 before both start to decline. That's exactly what we're seeing as well. No change, though he doesn't give any upside targets or anything. That's what you get from me. So the NASDAQ is also in this wave 5. Okay. So as he said, we have reached inflection zones. Okay. But haven't seen any impulse lower. I agree. And they're just zones. They're not hard levels. I agree with everything. So we have 0 topping signals in place. It shows the Dow Jones could be an entirely different wave count than the technology sector. Quite clearly, of course, in the sense that we're making new all-time highs almost on a daily basis in the S&P 500, NASDAQ, 100 semiconductors. The Dow Jones not so much the Russell 2000/IWM, neither. Okay. Speaking of the IWM, this one broke now finally below this downtrend line that has held the upside to check, or the downside to check. See this? This connects with the October low and the April low, and we broke below it. So that's bearish. And now the warning levels have been adjusted accordingly. The first one is, of course, back above the downtrend line for the bears. The second one is back above yesterday's high. Then, of course, back above Wednesday's high. That was the inflation reading high, so to say. And the final warning, I would say, is above 209-ish, 210-ish. Okay. But this doesn't look too great. We're below the 10, the 20, the 50-day moving average, as well as below the Ichimoku cloud. So now the ideal target is somewhere between 174 and 188, right? So this was the path we were looking for in April. Once this target zone was reached, that we would see a bounce to the green target zone and then a decline. So far, so good. Okay, it's been extremely ugly, it's been extremely messy and overlapping, but so far, so good. I cannot, of course, forecast every single move. I know my trading system was, for example, short the IWM and it got stopped out here on Wednesday. Ah, shoot, but we'll give it another try here. We got a new alert that we can try it again. Why? Because this is a new close that is below previous closes. One of the reasons. And it's a weak looking chart. This is a completely different looking chart than, for example, the SP 500, right? See here how this is looking versus this. So this tells us, nah, not so great, right? This tells us great. And now we'll see, do we have any signs of a bottom in place? No, not at all. Everything looks weak. Everything looks nasty. IWM has, of course, and the small caps have, of course, underperformed the large and mega cap tremendously over the last 1,000 years now, and continue to do so. That's pretty much the bottom line. This is not a chart I would long. I'm definitely not playing it. I don't like the chart in the small caps whatsoever, but I'm sharing it with you for those that are interested. So what are others seeing for the S&P 500, for example? This is work from our friends at wavetrader.net. This was posted on their public page 3 days ago, or well, today, but it's from 3 days ago. This is from, I believe, June 11. Let's see here if we go back. Yeah, June 11. So they're still looking here for a larger B wave. I've kind of given up on that. It's getting a little bit too much in my hand. I think it's more like an A, a B, and a C, if anything, and not A, a B. But you know, this is A, this is B, and this is C of that 5, which is fine as long as we get to the same upside targets. So this is from 3 days ago, where they said we got the wave 3 targets somewhere between 54.13 and 54.29. Well, as you all know, we went, of course, above that one. I think we went as high as, well, let's have a look here at the hourly chart. That's not that one. Here, the S&P 500, we got as high as 54.45, and since then we've kind of gone sideways. So 55.45 is not, it's right here in this ideal wave 5 target zone, so extended. So we get the 3. And also here they're looking for alt 3, alt 4, alt 5. I think that is more likely the case than what we've here, the 1, 2, 3, 4, 5. That is all of 5. I think we need to see another 4 or 5 setup, because also here, because we completely surpassed it, we didn't see a decent pullback that would align with this wave. Not yet. This is, in my humble opinion, a little bit too shallow, too brief, too short. And the current decline doesn't look impulsive either, this setup. Not at the moment. Could all be 1, 2, 1, 2, 1, 2 setup. Well, I'll have to see the 3, 4, 3, 4, 5 before I declare a top is in. Also because we have not gone below any warning levels. All right. The bears haven't even fired a shot yet. So if they don't fire a shot, it's full steam ahead until we at least hear some rumbling in the background where we kind of go, that sounds like a shot. Let's see if we might get a little bit of splash of water in front of our ship. So also here, back then, 3 days ago, still looking higher. I'm still looking higher as well. The last thing I wanted to share is from Sentiment Trader. Please keep this quiet. I'm not supposed to share this, but it's called a Titanic Syndrome Alert. The key points is that we have a Titanic Syndrome indicator flashing early warning signs. It's a condition, it's not a trade signal, okay? It simply raises long-term concerns for stock-related investments. But other markets may offer safe havens, which are gold and silver. But we've been bullish on for I don't know how long. So if you're still not on our gold and miners forecast work, shame on you. You should. It's really, really fun. I think there's a lot more money to be made in those than in the stock markets. But hey, it's all good. Whatever floats your boat. Again, the alert does not say sell everything, sell now. Alert says there's likely trouble ahead in the next 12 months. It could include a significant market decline. So be prepared to act if price action shows signs of breaking down. That is the Titanic syndrome signal. Going through all, of course, the previous occasions. And again, you can see here, it's getting quite frothy on that one, but we have no decline yet. We haven't broken below any price level, so we can't do anything other than just taking this information with you and saying this is a good forewarned is forearmed. Okay, so it's nothing more, nothing less. So no need to take any action. Just remember, you have been forewarned. Forewarned is forearmed. And I want to share that with you. It's called the Titanic syndrome alert, just to make sure. Okay, no reason to act because we have not broken any levels, but this is something we keep in our pockets, in the back of our mind, and it matches our wave count, where we are looking for a much larger wave top going forward, right? That's what we're looking for. And the safe haven would be commodities, all right? Two potential ports in the storm, dollar and commodities. That's what they're looking for, and I agree with that. Absolutely. So back to square one. Dow Jones still has a couple options available to itself to be determined which one it will be. Are we going to decline instantly, and technology and S&P 500 go their own merry way to be determined? Those seasonalities suggest some weakness into end of May and then a big fat rally. We'll see if that happens. We have been wrong-footed before on seasonality, so I'm not going to hang my hat on it. If it follows the pattern, I'm gladly going to adapt it. The NASDAQ looks better still with some more fourth and fifth waves to go. Also on the weekly chart would look better with some more fourth and fifth waves to go, unless we break below warning levels, right? We're bullish until proven otherwise. Semiconductors as well, we do need, in my opinion, at least and at minimum, one more fourth and fifth wave, potentially two, okay? S&P 500, current price action, probably sideways consolidation for this gray wave 4. I still expect a higher wave 5 because the current top does not look like all of wave 5. And then we'll see if that top we're looking for somewhere in the 5500s is all of the larger top, or only a 3 or 4 still get another fifth wave to go. Other people are also looking for an unwinding of the current rally, but we cannot say that another 4 or 5 still is needed. Okay, so we're getting close, but not there just yet. And at Wave Trader, seeing the same one as well. Did we complete all of 5? Probably not. I think we're in this Alt 3, Alt 4, Alt 5 path. IWM is the worst looking chart, has been the worst looking chart for a long time. Did drop below its 50-day moving average, did drop below smoky clouds, so weakness ahead. And I think next week we might see a little bit more weakness. And long term, things don't look great, but long term, there's no reason to act on anything yet. Forewarned is forearmed, and we'll deal with it once we get there when further upside targets are reached. And then from those, we'll see breakdowns below key levels, and we haven't seen a single one of them. As I said, the hourly chart in the S&P 500 hasn't even seen a break below the first one. And that should say enough. Take care, trade safe, and have a great weekend.